Step 1 is to fortify your portfolio. You need to build a defensive core that can withstand the political drama. This isn't about going to cash and hiding under your bed. It's about smart strategic allocation. First, look at sectors that are shutdown resistant, even shutdown proof. Think about it. Does the government stopping impact your need for toothpaste, electricity, or healthcare? Not really. That's why consumer staples, utilities, and healthcare stocks have historically been safe havens. During that 35-day shutdown in 2018, while tech was getting hammered, a company like Procter & Gamble, which sells Tide Pods and Crest toothpaste, barely budged. These are the boring, essential businesses that people need no matter what. Second, within this defensive core, you must look for quality. I'm talking about companies with strong balance sheets, little to no debt, and a history of paying and increasing their dividends. Why dividends? Because in a volatile sideways market, that dividend payment is a tangible return that puts money back in your pocket while you wait for the storm to pass. A company like Johnson & Johnson hasn't just paid a dividend for decades, they've increased it for over 60 consecutive years. That's the kind of financial fortress you want on your side. So action item 1, audit your portfolio. How much is in high-flying speculative tech versus stable, cash-flowing essentials? A good rule of thumb is to have at least 30–40% of your portfolio in this kind of defensive quality foundation before any potential crisis hits. Now, step 2 is where we get tactical. This is about capitalizing on the fear. When a government shutdown investor's guide hits the news, fear spikes. The VIX, which is the market's fear index, can jump 30, 40, even 50%. And when investors are fearful, they make emotional decisions. They sell good companies at bad prices. Your job is to be the calm, logical one, ready to buy. This is called contrarian investing. You're not following the herd, you're going against it. But you don't just buy any dip. You need a shopping list. Create a watch list of high-quality companies you've always wanted to own, but thought were too expensive. Think of the greats, your Apples, your Microsofts, your Visas. During a panic, these blue-chip stocks often go on sale. For example, during the 2013 shutdown, the market dipped nearly 4% in the weeks leading up to it. That was a golden opportunity to buy world-class businesses at a discount. The key is to use limit orders. Don't just market buy in a freefall. Decide on a price you're comfortable with for each stock on your list, set a limit order, and let the market come to you. This removes emotion and turns a period of chaos into a strategic buying opportunity. You are essentially being the person who is selling umbrellas on a rainy day. Everyone else is getting wet. You're building a business. Step 3 is the most overlooked, but arguably the most important. Double down on your knowledge, not just your capital. A government shutdown creates massive information asymmetry. Some people are glued to the panic-filled news cycles. But the smart investors are using that time to research and understand the specific mechanics of the event. Which government agencies are most affected? The SE might slow down IPOs and new filings, which can impact certain sectors. National parks close, which hurts travel and leisure stocks. But did you know that defense contractors often see their payments delayed, not cancelled? This creates a temporary headwind, not a permanent impairment. Understanding these nuances allows you to spot the real bargains from the value traps. Furthermore, this is the perfect time to stress test your entire financial plan. When was the last time you looked at your emergency fund? In times of volatility and economic uncertainty, having a rock-solid cash cushion of 3 to 6 months of expenses is what gives you the psychological fortitude to not touch your investments. It stops you from being a forced seller at the worst possible time. Use the shutdown headlines as a trigger to do a full financial health check. Is your asset allocation still in line with your long-term goals? Are you overexposed to a single sector? This proactive review is what separates the amateur from the professional investor. Let's bring this all together. The Government Shutdown Investor's Guide to Navigating Market Volatility is a 3-part mantra: fortify, capitalize, and analyze. First, fortify your portfolio with defensive quality stocks and dividend payers. Second, capitalize on the fear by having a shopping list and using limit orders to buy great companies on sale. And third, analyze the situation and your own finances to make informed, unemotional decisions. This isn't about predicting the news, it's about having a plan that works regardless of the headlines. The most successful investors aren't psychic, they are prepared. If you're tired of feeling anxious every time there's political drama in Washington and you want a clear, actionable framework for building real, long-term wealth, then you are in the right place. We break down complex financial concepts like this every single week. So take control of your financial future. Hit that subscribe button and ring the notification bell so you don't miss our next guide. It's time to stop letting the headlines control your portfolio and start making your money work for you, no matter what.